Hey, good evening, everyone. This is Michael over here at ARM Capital, going through our weekly video of stocks and alerts for you guys this week. Hopefully, it'll be a little bit better week than last week. That headline risk Monday, Tuesday with Trump just kind of screwed a couple of our positions. But we did have a few winners, but wasn't our best week. So we're gonna plan ahead and go forward. Start looking at SPY. We're at a pretty significant level right here at that 260s. We break that with volume. We're going to stay on the short side. We're also going to be monitoring, headlines to make sure that some trade deal talks aren't being released when we're trying to take a short position. That would just be awful. Q, it's probably not going to. It's still pulling off from making its lows in last week, so probably going to stay pretty neutral on this one for now. Looking at some of the Chinese stocks that have the most effect. If you want to play the upside, if you do get some news from the Trump administration, you might want to hop on the long side of JD. It's just nice break above here, and this is when the market was tanking, and you got a slight pullback here to its moving average, and you can see this going higher if it has some some headlines to help propel it forward. Alibaba, we would probably go on the short side. And we're going to see a break below this level. We might come back up to this moving average before we head down. And this is if we don't see much change in the trade negotiations between the U.S. and China. I'm in a pretty interesting channel right now. It's been like this for quite a while. We're looking for it to come back up to its moving average and its trend line, and we might take a short position on this if it starts getting hit again. Something to watch out for. Usually Netflix is pretty pricey, but granted how tech was positive last week, we want to see that could continue again this week. As with repricing, maybe momentarily on the long side of this might not be a bad idea. You have $10 spread that you can work with, $5 spread, depending on how much you want to risk on that trade. We still like JPM to the short side. On Monday we got in. I think we got in like 102, rode that down, covered at 100. It's one of our better trades for the week. We're looking to short again. If we get some more, pressure on financials come Monday morning, you're hovering around 100 level, so we're looking for like 198 spread. Would probably be something we do. We might even take just a 99 open put. All the banks the financials just look terrible. This is where a lot of the action is going to be probably this week. Bank of America, it's coming right back up to its moving average, and it could continue lower. It's just been decimated. So if you think there's going to continue down to the downside for financials, all these are really good to look at. Wells Fargo, what more could you want? You might be able to wait for it to come back up another 30 cents, 40 cents, but right now is a pretty good entry point if you're going to ride this to the downside. Alright, yeah, this is another tech play. It's kind of on its locked, weekly support level. So we're looking for a little bit of an upside here. It's a descending triangle almost with it. Each wave is getting smaller and smaller. So we might look at try a triangle here if we get some volatility, because it's going to break one way or the other. It's probably going to break pretty aggressively. But that's a riskier play, so make sure you run it through risk parameters. See, Citigroup, another short position. On banks, if you want to take it. Square, same kind of thing with the straddle. That's all about timing, which is the hard part about those. We're not real close to earnings right now, so we really need like a catalyst to get this thing to move one way or another. But we're going to keep an eye on it. Microsoft started to look good. Monday, Tuesday, a lot of that trade talk, but then it's just been broken down. So you could see another downside. I see another $2 or so, 105 to 106 to 104, if you wanted to. This is actually kind of a fun trade. Personally, we're not taking this one, but just because we fundamentally don't think GE is a company worth trading. But it's been just hammered and hammered and hammered for months and months and months. If we go back out to the daily, you can just see as soon as October hits, boom, boom, boom. he's lost 50% of his value in 2 months. You know, that's crazy. But you finally see it starting to see it pop up here. Now it's moving averages on some significant volume right here, and so if a long position wouldn't be out of the question here, we just probably won't be taking that just because of the fundamentals. But it's interesting to look at. All right, and last place going, and if we do get our trade war talks, you know, this could go either way. But we have seen significant depreciation in the stock over the last couple months, and just keep on with the stock. Boom, you see a huge move here in late November. You know, back right up to its yearly range, and now we're right back down at this yearly lows. So if we break below this, you know, there's some significant downside. We're definitely watching that. Keep on the radar. All right, guys. Well, that's it for us. I hope you guys have a great week. Shoot us any questions that you have. We'll be happy to take a look at them. All right, take care.